Hello everyone, I'm Karen B., and the Comply on the Fly topic for today is the recent flurry of activity in the Pharmacy Benefit Manager or PBM space. Several things have happened over the last 30 days, and I'm going to briefly break it down for you. First, on January 30th, the Department of Labor, or DOL, released proposed transparency rules for PBMs. A few important things to note off the bat. These rules are currently in proposed form, meaning they are not final and applicable to anyone just yet. The comment period does not close until March 31st, and the DOL will need some time to review all comments and consider the other activity taking place in this area to avoid duplication and confusion. To give you an idea of what these proposed rules are about, note the following. They are applicable to self-funded ERISA group health plans with no size differentiation. They are indirectly applicable to covered service providers contracted with these group health plans to provide pharmacy management services, including PBMs, affiliates of PBMs, and TPAs, or third-party administrators. There are required disclosures that will need to be made by these entities to the self-funded ERISA group health plans when contracting occurs and then semi-annually. The disclosures would include compensation, rebate, and pricing methodology information, to name a few elements. Rebate amounts that are retained versus passed through must be reported on, but this rule does not include a 100% pass-through mandate. The rule also includes annual audit rights for plans to audit PBMs. The enforcement of this rule would fall under ERISA 408B2, which is a disclosure and transparency requirement under ERISA for purposes of a plan's ERISA fiduciary duty. Non-compliance renders the service arrangement for the plan unreasonable, causing a prohibited transaction under ERISA. Second, on February 3rd, the Consolidated Appropriations Act, or CAA, of 2026 was signed into law. The requirements in the CAA are statutory and can be interpreted further by the agencies, but cannot be changed like proposed rules can be changed. The CAA includes the following. It is applicable to all group health plans, including fully insured plans. It delineates on size. Large employers are those with 100 or more employees and will receive more detailed PBM reports under the law, while small employers, less than 100 employees, will only receive aggregate information. There is a 100% pass-through rebate mandate that would apply to all ERISA plans and third-party administrators. Disclosures would be required every 6 months or quarterly upon request by the plan and would include compensation from the plan to the PBM and the PBM to the pharmacy, spread amounts, rebates and other fees, gross and net drug spending, broker and consultant fees, and benefit design parameters that favor affiliated pharmacies. The CAA also includes audit rights for ERISA plans only. Penalties for not providing the required disclosures are steep, $10,000 a day, and there is a $100,000 per item penalty for the provision of false information by the reporting entity. While the CAA provisions would not be applicable until August 1st, 2028 for non-calendar plan years, January 1, 2029 for calendar plan years, the DOL proposed rules apply much sooner, depending on how fast they are finalized, potentially January 1st of 2027. Finally, there has been a settlement in the Federal Trade Commission, or FTC, lawsuit against Express Scripts. The lawsuit is still pending against Optum and CVS. The lawsuit is focused on the high cost of insulin, but the settlement also addressed PBM business practices. We will cover the details of that in a later episode. Bottom line, stay tuned. There are a lot of moving parts in the PBM legal and regulatory space with guaranteed changes to the items addressed today. So again, stay tuned. And that is your Comply on the Fly topic for today. Thanks for tuning in.